morning, everyone, and welcome to Market Fatafat right here on ET Now. I'm Avan Lubash. We have a steady market at hand, fueled by lots of global cheer, as well as the fact that macros seem to be getting back on track. But for now, we are keeping it with earnings because they're pouring in thick and fast. Heritage Foods delivered a pretty stellar quarter on pretty much all parameters, barring the top line growth, which is just about flat. Let's talk to Mr. Brahmani Nara, the ED of Heritage Foods, who joins in right now on the show. Thanks so much for taking time out. To begin with, your margins have seen a great expansion, but the growth has slowed tremendously for you. Now it's at the same level as it was the last year. So what exactly is the reason for that?
Specifically answering the question of top line, yes, top line has been pretty much flat for the second quarter of FY19 compared to the last year corresponding quarter. And the reason for that is, like I mentioned earlier, there is a huge glut of milk in the country. As a result of that, procurement prices had decreased, and we had to pass on that benefit to the consumer. And that's why you'll see that although there was an increase in volumes of milk as well as value-added products, that's not reflected in our top line because our net realizations have come down. So for milk itself, you'll see that the volume growth that we've seen is close to 5%. For value-added products, the growth in value was about 16%, specifically for curd, which is our major value-added product. There was a growth of volumes of 24% from Q2 last financial year to Q2 FY19.
So what was your average volume growth this quarter?
The volume growth for milk itself, the volume of milk on an average was 11.44 lakh litre per day, which is a 5% growth in milk volume. And when it comes to value-added products, and curd being our largest contributor to value-added products, was it an average of 285 tons per day, which is about a 24% growth in terms of volume itself.
Can you tell us what was the percentage contribution and growth seen in your value-added products?
We've seen a positive traction there. The percentage contribution of value-added products had increased from 20.8% in Q2 FY18 to 23.3% in the last quarter, Q2 FY19. So that there's been a significant growth over there. In terms of margins, typically value-added products are higher margin than milk. Milk was at about 7.5% when it comes to EBITDA margin last quarter, whereas value-added products on an average were at 13.5% in Q2 FY19.
So has the drop in milk prices been majorly responsible for your margin expansion this time around? And, what is the drop that you've seen?
You must understand that being one of the reasons, definitely. The other reason is the fact that we are heavily focused on B2C business as a company. We're a consumer brand, and we don't focus on commodities like skim milk powder or butter. So as a company, since we did not focus on that and we sensed that, realizations would be lower because of a glut of milk in the market, we also managed those inventories well, such that we wouldn't see a loss because of those commodities. So I would say it's a function of both lower raw material costs as well as better management of commodities such as skim milk powder and butter that had helped us show better profitability this year.
So tell us a little bit about your new launches. You had plans for yogurt and curd too. Is that going to be a big part of your portfolio?
Currently, the newer launches that we've made include long shelf life milk, which we call as special milk. We have this in various variants, tone milk, double tone milk. We have it in small packs such as 100 ml packs as well as larger pack sizes also of 200 ml. This is a very interesting opportunity for us because especially in rural areas, we're seeing where refrigeration is an issue, power is an issue. We're seeing that this is looked at as a much more interesting option for the consumer and for the retail also. So this has been a very decent launch for us. We have a dedicated processing facility for it with a capacity of 1 lakh litre per day. We're already using about 50% of the capacity of that particular processing facility.
Thanks so much for joining in and giving us a sense of your new product portfolio, margins as well as outlook for the company. That's Heritage Foods, talking about the numbers. Well, let's get started then with Market Fatafat. Our team of research analysts is with us. We also have Kunal Bothra and Swati Hodkar, who will be joining in just a bit. First up, let's start off with Auto then, and Hero Moto in focus on the back of auto sales numbers. What did they deliver in the month of October, Mubina?
Well, yes, Hero Moto has been one of the top gainers today in trade, and it's primarily on account of the way they've been able to once again do pretty well when it comes to their October sales, their monthly sales rather. So for the month of October, it's come in at 7.34 lakh units, which is indicating an uptick of approximately 16.4%. Now, if we look at what the ET poll was suggesting, and do remember, two-wheelers in general were expected to do pretty well in the October numbers. So we were expecting a number of about 7.1 lakhs, and they have delivered 7.3 lakh units. So you are seeing the stock price rally today.
Oh yes, indeed. That's the take coming in on Hero Moto. But let's move right on then to Engineers India. And Kunal, you believe that there is a lot more potential for the stock to rally?
Absolutely. I think today the volume is at a 5-day high. Stock is across the 50 DMA. And looking at the way the stock has gained momentum after a breakout, I believe the stock should just about gain additional bit of positive trends from current levels. So the near-term target which I am highlighting on Engineers India is closer to 132. Stop loss to be kept at 120.
All right, that's the word coming in on Engineers. India can rally to 132. But tell you what, we're having a little bit of a technical glitch with those graphics. So we'll take a quick break, try and sort it out, and come right back on Market Fatafat. Welcome back. This is Market Fatafat. Let's move right on then. Now we've got everything sorted. Let's flag off those buzzing stocks in trade. HPCL is up to its winning ways. Let's just talk a little bit about what the quarter gone by was and of course implication of crude oil prices. Pranay, to you.
Well, Avan, it was known that the numbers won't be strong, so even Deutsche Bank has said that operationally as well as the bottom line turned out to be much lower than even muted expectations. While the stock may have corrected quite a bit and there is value at the current price, they only have a target of about 240, so they don't see much of a scope from here on. What they believe is that with the elections coming up, there will be some pressure on the marketing margins business, and therefore they would like to remain neutral or underweight on this counter.
All right, that's the take coming in. HPCL, and it's clearly not reacting to the quarter gone by, but more so what the outlook is on up and about in trade right now. But let's shift gears then, and it's M&M which is in top gear, and rightly so. Remember, it just came out with its tractor numbers earlier this morning, and the tractor sales have grown 17% to come in at 47,376 units. The tractor exports as well have been quite healthy at 1,064 units. Not just that, remember yesterday you had their overall sales rising about 13% to 55,350 units. So that has come in fairly strong this time around. A noticeable growth in the CV segment as well. And this has come in pretty strong. Moving right on then from M&M to Arvind, and let's talk a little bit about the F&O positions. Siddharth?
Well, in a market which is going up and Nifty right now is 200 points up, we are seeing some of the stocks not doing so well, and Arvind Limited is one of that. We did see, in recent weeks, there was a smart bounce back from lower levels, but today, Avan, we are seeing formation of short positions, and look at the nature of fall, and there's no intraday bounce back despite market doing well. So the stock is under pressure and cash volumes are very high. So it is not just speculative shorts. I think there is someone selling in cash market as well, which is resulting into Arvind underperforming big time today.
Have it, that's the take coming in, 3% down. Arvind is certainly in focus. High volumes as well being seen in the cash markets. Well, let's get in another auto stock, and that is Maruti. But let's understand what exactly the stock is showing by way of technical trends. Swati Hodkar with us on the show. So Swati, what is your opinion? What does one do? Maruti has not been impressive when it comes to the overall earnings growth in terms of rather the auto sales numbers. How are you reading into the charts?
See, on weekly chart, if we look towards that RSI is showing on the verge of giving the positive crossover from the oversold zone. So we have seen a lot of sell-off in this particular counter, but I believe that this selling pressure intensification will definitely come down, and I believe that this bounce back rally is likely to be continued at least 7,080 to 7120 odd levels. So those who are looking for a long position, they can definitely build on at the current level, or any dips towards 6980 levels, they can go for a buying position. For immediate target of a 7080, 7120 with a stop loss of a 6960.
All right, Maruti, 4% and counting. The take is that there is upside to the tune of 7,080 to 7,120. Mubina, Trent as well is in focus. Let's just talk a little bit about the earnings. Have they been inspiring or not?
You know, on the face of it, the numbers look like a mixed bag, and that's perhaps the reason why you've seen the stock price as well come off from the day's high. We have the revenue figure, which has been able to post a decent growth of approximately 90 odd crore rupees from the corresponding quarter of 522 crores. So now it's at about 616 crore rupees. Margins, however, have been okayish. In fact, they've underperformed. EBITDA, in fact, has the pace of growth in the EBITDA has definitely not been up to the mark when it comes to compared to the revenues, and hence you have seen the margins compress a tad bit. The profits have grown by 10%. So it's purely a mixed bag of numbers from Trent, and that's maybe the reason why you've seen the stock come off the day's high.
All right, that's the view coming in on Trent. So mixed bag maybe is how we can describe it. Meantime, IGL is the stock to flag off as well. What's the Nomura view, Pranay?
Well, what they're saying is that Gurugram, the fact that it has come under IGL's control now, brings about significant volume visibility at least till FY25. The valuation for the same that it will be acquiring is something that will be determined by an independent body in a few weeks' time. But this is a big win and a shot in the arm for IGL. In terms of stock price, it's already rallied quite a bit. Therefore, you've seen the stock come off its opening highs right now.
All right, watch out for IGL at 284. Meantime, HDFC as well delivered its earnings, and you have Morgan Stanley reacting. They're very upbeat on the stock. They maintain an overweight rating with the target price at 2,400, fairly aggressive. They assign a price to book multiple of 3 times to the September 2020 BV. They say that a normalized ROE of 20% does seem fairly sustainable. So good going for HDFC. Let's move right on then, and Siddharth, talk about an OMC, another one. We flagged off HPCL, now BPCL. What are we seeing today with a nice 6% bump up?
Well, there's one common reason that crude oil prices are correcting, and that has a sentimental effect on OMCs, and that's the reason you are finding 2 names into this session. But I just want to highlight what exactly is happening on the technical front. So stock has breached its resistance, which was around 304, or it is challenging that resistance, I would say. And at the same time, we are clearly seeing fresh formation of long positions, 12 to 13% rise in open interest. So that's a substantial rise. And needless to mention, if this kind of move happens, you would have high cash volumes as well. So in all fronts, technical and derivative, the stock is looking positive. Fundamentally, also there is a reason because crude oil prices have crashed.
All right, of course, it's the crude trigger that's keeping these stocks afloat. Fresh longs being seen in futures. Kunal, let's move on and talk about a heavyweight, another one, and that is ITC. At 282, the question is there going to be sparks of volatility? Are we going to see some sort of a decisive trend or not?
So in a couple of days back, the stock was trading below its 200 DMA, and there were signs of swing breakdowns on the stock. And now when you see the stock price, it's reversed, and now it's trading above its long-term averages. And when you see the spate of all the large-cap stocks which have been bouncing back, the chances and the probability is extremely high that even ITC could probably participate in this bounce back. I would suggest a buy above this breakout level of 285. Targets could be kept at 295 and stop loss around 278.
All right, watch out for ITC 282 and counting. Meantime, it's a GSK consumer, Mubina, that we're flagging off as well, and it seems on the face of it like a fairly healthy quarter.
Yeah, that it certainly has been able to deliver. Mind you, GSK Consumer had been through a period of flux where it wasn't actually able to meet analyst expectations. But this time around, with the revenue growth of 14.4% as opposed to expectations of an 11% growth, margins as well have expanded from 23.3% to 27.8%. Analysts were expecting a margin figure of only 24.3%. So that as well is a big beat, and naturally it has led to a profit growth as well, which has surpassed analyst expectations. The profits have come in higher by 43%. So after very long, you could say that GSK Consumer has been able to deliver on all counts when it comes to its second quarter numbers, and hence rightly so you are witnessing the uptick in the stock price.
Oh yes, indeed, and rightly so, well deserved on all parameters. It's been a good quarter. Let's move on then, and healthy margins as well when it comes to SRF, Pranay.
Well, overall, very good results. Revenue has risen by about 49%. Profits are up 47%. So most of that growth has flown into the bottom line. If you look at the margins, yes, rightly pointed out, it's increased about 160 basis points to 70.4%. So segmentally, we've seen very good business across plastic packaging as well as nylon tire, cord fiber fabric, and specialty chemicals, which has been a little soft. Their outlook is improving. But if you look at the stock, it's come off its opening highs. That's because it's already run up about 18-20% in the last few weeks.
Keep an eye out on this candidate as it's holding out smartly on the back of earnings. Meantime, let's also take in another set of numbers, and that is Greaves Cotton. In fact, it wasn't ideally the strongest set of numbers. It's been a little bit mixed this time around. You have the earnings which have come in. The profits have been very flat at 49 crore rupees. Top line growth has come in high by 9.5% at 495 crore rupees. The engine segment has been very good. It's been up at 468 crores, and that's supported your top line growth. Margins have been a little bit flat at 14.7%. They plan on evolving their mobility strategy. They plan a capex of 100 crores for the next 12 to 18 months. So lots of plans in place for Greaves Cotton. Let's move on then and pull up Balkrishna Industries, and clearly this is sustaining despite the volatility, Siddharth.
Yes, at least not today. Today markets are moving in unidirectional fashion, and 8th consecutive day one that the stock has closed in positive territory. Yes, some of the days would be like very marginal upside, but overall 8th consecutive trading session that stock is doing well. It has decisively moved above its 200 DMA, which is also a positive indication. And needless to mention that when such moves happen, long positions do get formed. So today too we are seeing formation of long positions.
Yes, you sure are, and that's why the stock is active in trade today. Moving right on then, it's Vedanta. Let's discuss this one in greater detail. Swati, based on technicals, we had Gaurang recommend this as one of his wealth creation ideas. Do you believe that for the long haul as well it's a good bet?
Yes, definitely this counter is clearly looking wet. As of now, today it has given a positive crossover of 50 as long as 100-day moving average, which gives a positive indication. Also the fact that the intraday, if we check the 120 minutes chart, yesterday it was just given a formation of an inverse head and shoulder, and today it has broken the neckline of a 217, and we have seen a very smart rally in this particular counter. So I believe definitely this rally is likely to be continued up to 240 to 245 levels. So one can take a long positions with a stop loss of 215.
Watch out, that's a view coming in on Vedanta. On that note though, we'll wrap it up on this show. Thanks so much for watching. Stay tuned. We've got Markets at Noon coming up after a short break.